Hello, good day to everyone, wherever you are in the world. My name is Edward James, the Director of Content Analysis at MEED Projects, and welcome to the first MEED Projects webinar of the year. We're just waiting for all the participants to come online. We had more than 1,500 individuals register for this webinar, so I'm just waiting for everyone to come in from the lobby, and then we will start. And as usual today, I'll give a approximately 20 to 30-minute presentation, followed by a Q&A session where you'll have the opportunity to ask your questions, and I'll do my best to answer them. As usual, you can submit your questions in the Q&A box you'll see in your Zoom bar. You can submit them in there, and I'll do my best to answer them later. You'll also might have noticed that this presentation is being recorded. So if you do want to listen to it later or to share it with any of your colleagues or friends, then we'll have it uploaded onto YouTube within a couple of days, and then you'll be able to watch it in your own time. Also, as in keeping with the last few webinars we've done, everyone who's registered for this event should receive a link to download this presentation in the next few minutes. So once this presentation, this webinar is over, you'll be able to go to your inbox and you'll find a link directly to immediately download this presentation webinar. So don't feel you have to note everything down as we're talking. We'll have an opportunity to look at this webinar, both in terms of the actual document itself and in terms of video later on. Okay, well, I think we've got pretty much everyone now on the webinar, so I'll kick off. So in this webinar today, as we've started now 2022, I'll take the opportunity to look how 2021 performed in the projects market in the region, to see how it compared with previous years, how it compared by country and by sector. Obviously 2020 was a difficult period for a lot of businesses and people due to the global pandemic. So it'd be very interesting to see how 2021 performed and if the market recovered. So let's take a look, shall we? Okay, so in 2021, there were approximately $104 billion worth of contracts awarded in the 6 GCC states. That's considerably up on the $66.6 billion awarded in 2020, and similar to 2019 numbers of $106 billion. So we've recovered very nicely. In 2021, we saw a lot of contracts awarded towards the end of the year in November and December, particularly in the oil and gas and petrochemicals field. And this propelled the number to almost 2019 numbers and just over 2018 figures. However, as you'll see here, we're still some way off the peaks we saw in 2013, 2014, 2015, when the oil price was above $100 a barrel. But it was a good recovery for the market after a very poor 2020 due to the pandemic. Now, I think I should add here that when I last gave this webinar, in fact, even when I was giving presentations towards the end of last year, it looked like 2021 would actually perform only a little bit better than 2020. It was only in December that we saw a raft of new contracts awarded on the Jafurah and Zuluf oil and gas field projects in Saudi Arabia, and the Baruj 4 petrochemicals project in Abu Dhabi, along with the Project Lightning subsea electrical network, that actually the year ended up as it did. But until December last year, it was looking as if 2021 would only be about $85 billion. So it was a good end 2021, but it was only just only because of these contracts awarded in December that we managed to hit this 104 billion target. And I think this slide, looking at Q4, the final 3 months of the year last year, contract awards, this illustrates that it was really all about the final month or two. So we saw that in Q4 of 2021, there were $35.5 billion worth of contracts awarded in the GCC, compared with just 15 billion in Q4 of 2020, 20 billion in 2019, and 30 billion in 2018. In fact, the Q4 performance for the projects market in the GCC last year was only beaten by 2014 and 2015 numbers. So you can see how much of an acceleration there has been in recent months in the projects market, and that's really, really good news. So excellent performance just in November and December alone last year, supported really by the Jafurah, Zuluf, and Baruch 4 projects, which really helped boost these Q4 numbers. And similar to those peak levels we saw in 2014, 15, and certainly a lot higher than the last 5 years or so. So a very encouraging sign for the last couple of months. Just for those of you who are still joining, and I see people are still joining, this presentation is being recorded and will be on YouTube within a couple of days for you to watch it in your own time. And you should all by now have received an email in your inbox with a link to this presentation itself for you to also download and share or look at it in your own time as well. Okay, so we saw the data for Q4 and 2021 as a whole for the GCC, but what about it on a country basis? So we can see here from this graph that almost every market in the region except Oman improved year on year from 2020. We can see here that the leading market by a big margin was Saudi Arabia, with about $43 billion worth of contracts awarded in 2021. That's nearly double what we saw in 2020, but it's still a little bit off a peak we saw in 2019 of $50 billion. So Saudi Arabia is definitely coming back strong. It is now the biggest market by a big margin in the region, and has still got some way to go, we think. Qatar had an exceptional year, again, almost doubling from the previous 2 years' numbers, seeing $25 billion worth of contracts awarded last year. In fact, for most of the year, it was the largest projects market in the region. And this was really down to the award of the some $15 to $20 billion worth of contracts awarded on the LNG program there, which made it an exceptional year in 2021 in the state. The UAE also improved, albeit by not as much as other countries. It rose to $24.2 billion last year, up from $19 billion in 2020, but still quite a bit down from the $32 billion awarded in 2019. And much of this was focused on Abu Dhabi oil and gas projects and petrochemical projects, and we'll have a quick look at the UAE in a bit more detail later on. Kuwait also improved on 2020 and 2019 numbers. In fact, it's the only projects market to have grown each of the last 3 years, which is very good. It still underperforms given the size of its oil and gas sector and its population and economy. Nonetheless, it's encouraging to see that the state grew a little last year too, as did Bahrain, going up to $2.6 billion, up from $1.7 billion in 2020. So that's also a good improvement. The only market which declined in GCC last year was in Oman, which saw just over $4 billion worth of contracts awarded. The Sultanate, however, is a very stable market. It always sits between this $4 and $6, $7 billion market range for project contracts, except in exceptional years when there were big complexes awarded. But you can see that the projects market in the Sultanate did struggle a little bit last year. But all in all, on a country level and in a total aggregate level, it was a very encouraging year in 2021. We did see a big return to recovery for most markets. Now, what about that same data, but on a sector level? So we can see how each sector has performed. And here the picture is a little bit more mixed. So historically in the GCC and the Middle East as a whole, the largest sector, usually by a large margin, is construction. And indeed, in 2019, we saw about $42 billion worth of contracts awarded. However, it was also the sector hit hardest in 2020 and the COVID hit, just falling to just $28 billion. And unfortunately, the market declined even further in construction, which is hotels, buildings, towers, villas, malls, hospitals, schools, and so on. It fell to just $23 billion in 2021. So again, it fell year on year. And it's now the second largest sector in the region. And that's the first time that's happened for a long time. It's nearly always been the largest single sector in the projects market. But last year it was overtaken finally by the gas sector, which was really buoyed by, of course, the Qatar LNG program and the Zuluf and Jafurah projects, reaching almost $31 billion in 2021. It's a massive increase on the previous 2 years, although that it does reflect one-off major spending programs, of course. So this decline in construction, going back to construction, really is a result of the collapse we've seen in the last few years of the real estate spending in Dubai. Construction spending is still pretty strong in Saudi Arabia, but the largest chunk of that used to be from the Dubai projects market. And of course, that's fallen away in recent years. And that's really why the construction market has fallen so much in recent times. Other sectors to have shown impressive growth last year, the oil market going up from $4.3 billion to 11 in 2021. Power rising from $6.7 billion to 13.5. A lot of that really is solar power, of course, and nearly all that is also private power projects, IPPs and IWPPs and so on, as well as a lot of transmission distribution contracts. Petrochemicals also saw a very significant rise last year to 7.5 billion, primarily as a result of the award of the main EPC contracts in December for the Baruch 4 petrochemical complex in Marais in Abu Dhabi. So that was a very big an improvement after a few very quiet years for the petrochemicals market. Now, some other markets also fell, unfortunately. Water, which has been a growth market in the last couple of years, actually surprisingly declined a small amount to $7 billion last year. And just as surprising as well is the transport projects market, which has generally in the last few years been the second largest market in the region. This has fallen the last 3 years in a row to just $8.5 billion. And that's, of course, roads, ports, airports, metros, airports, and so on. So that was a little bit disappointing too. So I think when we're looking at 2021, it really does depend on what market you're looking at, as ever, what sector you're looking at. Generally speaking, it was a good year for most markets and most sectors, with just a few exceptions like construction, transport. Now, as we discussed, Q4 last year was an exceptional period, the best Q4 we've had since 2015, 2014, and one of the highest ever. Some $35 billion of contracts awarded in October, November, December. And here are just a few examples of those. The largest single contract awarded to Yan Danul and Samsung C&T was for the subsea power transmission network sponsored by ADNOC and Turkish. It's a private power project taking excess electricity from the nuclear power plant in Baraka and using it to extend that electricity provision to all ADNOC's offshore facilities. So that was awarded in December, and that above $3 billion, and that really helped the market. As did the award of the three main packages on the Baruch 4 petrochemical complex, the UNO package, the cracker, and the polymers production unit. That's more than $5 billion worth of contracts, again awarded in December. And then another big project, two big projects really by Saudi Aramco, the unconventional resources program, Jafurah, that was awarded as well, as was the main offshore packages on the Zuluf field development, which also saw several $1 billion of projects awarded. And indeed, we are now waiting for the onshore element of this project to be awarded, which will be any time now. What else? We also saw the ammonia plant on the hydrogen project, Helios in Neom. We saw long-awaited contracts finally for packages A and B on the Dalma field as well for ADNOC. And it does seem that both Aramco and ADNOC, as well as QP, of course, with the LNG program earlier last year, it does look like they're entering this strong capex phase. After a few quiet years, they are certainly ramping up activity. So we'll hopefully see more of the same with projects like Hail and Gasher this year, Shaif Gas Cap, Zaluf onshore in Saudi Arabia as well, and perhaps the Al Miral complex and the Kuwait Petrochemicals complex as well, the prize project also coming to market this year. Just a reminder as well, please, to submit your questions in the Q&A box. We will be doing a Q&A session after this presentation is over. So if you do have any questions about anything that we've spoken about today, I'll do my best to answer them. Please do submit your questions in the Q&A box. So that was this was the top oil and gas process projects, power, oil and gas. We also saw a number of big construction and transport projects awarded in the final quarter of the year last year. We've got a number of contractors won the infrastructure support facilities for the missile defense system for the US government in Saudi Arabia. We saw Abu Dhabi Ports award the marine works contract on the Shamal development in Abu Dhabi. We also saw a couple of big contracts in Dubai awarded. It wasn't completely dead. We did see MAG main works contract awarded and District 1, 2. We've seen some work in Oman awarded at Yiti and a range of other contracts. Nothing particularly significant. However, we started Q1 very strongly with the award of the super basement complex in Diriyah Gate in Riyadh to rebuild. And we're fully expecting a slightly better year for construction and transport projects going forward. And the first indications are that this is going to be the case. Okay, let's look at the project market performance in a different way. Let's look at it in terms of cash flow using the MEED Projects cash flow module, which you can find on the platform. Here we're looking at, rather than looking at contract awards in any given time, here we're looking at cash flow spread over the lifetime of a project's development and capex. And here we can see that despite contract awards growing in 2021, cash flow still remains much lower than it was in 16-17, and as you can see here, has been in decline year after year for the last 5 years. And that means, of course, that the market is a good 10 to 20% smaller than it was 5-6 years ago. And that's, of course, creates a lot of challenges for the projects market in terms of fewer opportunities, fewer projects in the market, lower project client spending than before. And it means that the market, unfortunately, has been in shrinkage in recent years. Clearly, with the project awards growing in 2021, we can hope to expect to see that cash flow start rising again. Now that we've finished, got over, we hope, the pandemic period, and projects clients seem to be spending again. But nonetheless, you can see here that after reaching a peak in 16, 17, 18, the cash flow has been in decline. But we're hoping that can change. Right, who are the top contractors in the GCC last year, just in terms of contracts awarded in the last 12-month period? And we can see that the largest contractor is Technip out of France, Technip FMC, and then Japan's Chiyoda. Both of these contractors were the recipients of the main contracts on the Qatar LNG program, which really propelled them into first place. Then we see the regular names of Saipem, Italian EPC contractor, India's Larsen & Toubro, multidisciplinary contractor. Abu Dhabi's NPCC, which is really growing strongly and aiming to become a regional superpower in terms of contracting. That's in fifth place with more than $4 billion of contracts awarded last year. Tecnimont, of course, the main winner of the Baruch 4 project. Samsung CNT, which won the, among others, the main contract for the subsea power network. You can see a range of other familiar names, Korean contractors, Chinese contractors, and some local firms like SSEM, for example, Target, alongside NPCC. Now, just in terms of the leading contractors by nationality, see which nationalities tend to be dominating the market at the moment. So approximately 37% of all contracts awarded last year were awarded to UAE and Saudi contractors. As you can see here, UAE contractors just edging out the Saudi contractors by a small margin. We then have the leading international nationality of contractors, Italy. Italian firms, particularly Saipem, $8.5 billion of contracts awarded last year. South Korean contractors like Samsung C&T, Hyundai, and so on. French contractors led by Technip, FNC, $7.9 billion. And then Chinese contractors of about $7.6 billion. That's not such a great year for China, given the previous year's exceptional performance, but nonetheless still not bad. And we've seen, as a result of Chiyoda winning the LNG program, we've seen a bit of a resurgence for Japanese contractors, which has been have been quite quiet in recent years. So it's good to see them back up. Then Indian contractors, about 4% of work, led by Larsen & Toubro, but also Shapoorji Pallonji. Kuwaiti firms with about $4 billion worth of work, Qatar firms, and so on. Right, who are the largest clients last year in terms of work awarded? Well, we've got, of course, Qatargas, which was the leading, which is the client on the Qatar LNG program. That's by far and away the largest single client currently, and followed by the Royal Commission for Riyadh City, which is tendering and has awarded already contracts on Green Riyadh project, the King Salman International Gardens project. It's going to be an extremely busy client over the next couple of years. Aramco, of course, always up there as a major active project client. The Royal Commission for Al Ula, which is developing the UNESCO World Heritage Site in coordination with the French government. Really exciting, interesting project. Of course, NEOM, still early days for NEOM, but already started to award a raft of contracts. Another regular, Emaar Properties, and then so on, ADNOC, SEC, and so on. Right, just very quickly on the Dubai projects market, just to illustrate the reason behind the fall in construction sector activity in recent years. The red line is Abu Dhabi, the black line is Dubai, grey line is Northern Emirates, and you can see that Dubai, which is the largest projects market easily in the 2015, 16, 17 period, even 18 period, has been in a very sharp downward spiral since that point, and only recorded about $5 billion of contracts last year, whereas Abu Dhabi is still being fairly stable and is now twice or even 3 times the size of the Dubai projects market. So if you want to know why the construction sector has declined, you can just look at this black line and see what's happened to the Dubai market in the face of oversupply and a shortage in demand. Well, we're hoping that can change. There's been some big project launches last year, some significant contract awards already this year. We're hoping that the market will pick up as prices for real estate increase and more and more projects are launched. Just another reminder that we are recording this presentation. It will be on YouTube, so within a couple of days. So if you want to watch it again, you'll be able to. We'll send you the link. And it also should have in your inbox already a link to download this presentation to look at in your own time. Okay, that's the 21 performance. Let's look at the short-term outlook for the projects market over the next 12 months or so. You can see here that there are approximately $37 billion worth of tenders currently under bid evaluation. That means the bids have been submitted and awards are due any time now. So that 37 billion is a very healthy number. You can see that easily the largest market currently for projects in bid is Saudi Arabia. Twice the UAE at $10.6 billion, and that just cements Saudi Arabia's position as the leading projects market in the region. The UAE is next up with about $5.7 billion worth of contracts currently under bid evaluation, can be awarded any moment now, followed by Qatar, $5.2 billion, then Jordan, $2.7 billion, Egypt, $2.6, Kuwait, $2.3, and so on. So we have a very large short-term projects market, which is obviously very encouraging because these are the most concrete projects which are likely to be awarded very soon. So it gives a lot of optimism for the year ahead. Just give a quick idea about what some of these projects are. just to crystallize that a little bit, we've got the Zarqa refinery phase 4. We've got a polypropylene plant in Egypt. We've got the Sheikh gas cap, which I mentioned earlier. We've got railway lines in Algeria. We've got the Kafko 7 fertilizer expansion in Qatar. We've got the cement plant in Duqm. We've got Ramco projects and so on. So we've got a lot of interesting contracts out in the market right now under evaluation. And we should expect normally to see these awarded over the next 2 to 3 months or so. Just as exciting is the value of work where tenders have been issued or where pre-qualification has started. These typically are contracts you would normally expect to be awarded over the next 12 months, i.e. this year. And you can see there's about $54 billion worth of projects or contracts under tender or pre-qualification. Again, Saudi Arabia is by far and away the largest market with close to $20 billion worth of projects tendered. That's way above the $6.7 billion in the UAE, $4.3 billion in Kuwait, Algeria and Oman, Iraq, and then so on. So again, very healthy outlook, but again, all eyes on Saudi Arabia. It is dominating the market right now. And we'll talk a little bit more about the opportunity and the challenge in Saudi Arabia later on in this presentation. What projects that are contributing to the numbers we just saw? You can see here, it's led by the Tabor IPP, for which qualification has started in Saudi Arabia. Then we have the solar 1 gigawatt project in Algeria, tail gas treatment unit in Saudi Arabia, and so on. You can see a bunch of other interesting contracts here, water projects, sewage treatment plants, PPP projects, Natural History Museum in Abu Dhabi, solar power projects in Oman, the new US Embassy in Riyadh, and so on. So again, a very varied list of projects across different sectors and countries. I'm not listing them all, but you would normally expect or hope to see these projects awarded this year. Excuse me. Okay, what about the longer term outlook? Right, so what are the major drivers behind long-term projects development in the region? Well, first of all, as I mentioned many times before, many of you are familiar, high population growth is a major driver for project activity. Clearly, when you have growing population, you need more power, you need more water, you need more social housing, schools, hospitals, and so on. So as long as the population continues to grow, as it is, for example, in Egypt, by about 2 million people a year, then the governments have no choice but to make significant investments in social infrastructure and utilities. And that's going to continue for the foreseeable future, being a major driver. Something that's a bit newer, emerging over the last 12, 18 months is the hydrogen projects market. As we've seen, dozens of new hydrogen projects announced almost in every country in the region. This is a new sector emerging, both in terms of blue and green hydrogen, in terms of electrolyzer plants, in terms of ammonia facilities, export facilities as well, liquefaction facilities, and potentially down the line as well, hydrogen pipeline networks and so on. So this is a very exciting new opportunity. It's led by the Helios project, NEOM, Air Products, Aquapower, NEOM, and then others will follow, particularly in places like Duqm, Kizad, Ruwais, in Egypt, and so on. So something to watch and something that everyone is trying to, I think, invest in at the moment. Also, I think something else I just want to touch on here, it is the Belt and Road Initiative. We've now seen China sign official Belt and Road investment agreements with most countries of the Arab world now, most recently with Morocco. And the Chinese are bringing a lot of investment to the projects market in the GCC and beyond. And particularly in places like Duqm, where you've got refineries, you have manufacturing plants, you've got industry, all being invested in by and financed by Chinese companies. And you just don't need to look any further than, for example, the new administrative capital in Egypt, which is having a large amount of financing and construction from the Chinese. And this is very welcome news for the region, bringing in finance and investing in industries which create jobs as well as stimulate the projects market. I also want to touch on some of the challenges which are prevalent today, because I think we can't ignore them. Clearly, the issue of delayed payments and cash flow is an ongoing issue. Contractors and suppliers complain constantly about late payments or non-payments. We've seen companies, big well-known companies, go bankrupt in the last year or so, like Arab Tech, for example, Beaver Gulf Contracting in UAE as well. And if companies don't get paid, it's very difficult for them to maintain their business. So we're still pushing for timely payments and for the supply chain to be receive their payments in time so that they can maintain their business. We've also got, of course, slow decision making. As a result of COVID, naturally, many clients, particularly in the private sector, are delaying their projects while they're waiting to see how the market recovers. Of course, the tourism sector and aviation have been particularly hard hit as well. So we've seen a lot slow down in those types of projects. Perhaps that's why that contributes to the declining value of projects in the transport sector. Of course, the market, as we saw from the cash flow graph, has also been declining since 2015. So that doesn't help, because there are fewer opportunities, and because companies are facing greater competition for fewer opportunities, margins are declining as a result. And then in recent times, since the middle of last year, we've seen a very fast rising inflation and increases in material and transportation costs, which have added another amount of headache, another headache for contractors and suppliers. And I also now want to touch on the potential for a crunch in Saudi Arabia. Now, we saw that last year, Saudi Arabia recovered very nicely. Well, some $43 billion of contracts awarded. And we also see that it's by far and away the most active market in terms of projects in evaluation and in projects in bid. And if we look at the schedule or tentative timeframe for some of these so-called giga projects in Saudi Arabia, and in the amounts involved, then we are expecting or can expect a very significant increase in activity until 2025, well, and beyond that as well. So based on no delays and based on most projects going ahead, we would expect something like $569 billion worth of projects to be awarded in the kingdom over the next 3 or 4 years. Now, that is a significant, it's about a 230% increase on the value of work awarded in 2016 to 2021. It was about $172 billion, and even considerably higher, nearly double, actually more than double, the $281 billion of work awarded in 2011 to 15. And of course, this has been driven by the PIF program, the giga projects such as Roshan, affordable housing, NEOM, of course, Red Sea project, Amala, Alula, Medina Darua, 7, Qiddiya, Saudi Arabian Highland, and of course, Aramco, SWCC, SEC, and so on. So if you just look at some of these headlines, Diriyah Gate to award $9 billion of contracts in 2022. Well, today it awarded a $330 million contract to NESMA for roads and infrastructure. It awarded a couple of weeks ago the $1 billion super basement to WeBuild. And so it's making good already on this number, eating into this already. Roshan wants to award $42 billion of contracts by 2025. The National Water Company wants to award $39 billion by 2025. And of course, a few months ago, Saudi Arabia announced that it was targeting $103 billion annually of foreign direct investment, which normally in the kingdom takes the form of capital expenditure on projects. So we've got a very significant and very rapid increase in project activity in the kingdom, which of course raises questions about whether there is logistical, manpower, engineering, and contracting capability to deliver all these projects on time. Is there enough capacity? Do the contractors have enough manpower? Is there enough engineering capability? What about material costs and material supply and availability to be able to deliver all these projects to the envisaged timescale? Now, even if this is only half the figure that gets awarded over the next 3-4 years, but still a very significant increase on the previous 5-year period, and will still represent a major challenge. So it'll be very interesting to see how Saudi Arabia and the authorities there deal with this opportunity and with this challenge as well. Longer term, well, we still got some close to $4 trillion worth of known, planned, and unawarded projects in the region. That's up from the $3.5 trillion in the pipeline that we were talking about the last presentation I gave, I think, in June. So that's a $400 billion increase I think that's about 15% in just 6 months. So the long-term pipeline for project activity in the region is still extremely positive. Again, Saudi Arabia, by a large margin, is the largest future projects, with something like $1.2 trillion worth of known future projects. Then UAE with $631 billion, Egypt $508 billion, Iraq $382 billion, and then Iran, Kuwait, Qatar, and Oman between, well, all around $200 billion, which is huge in its own right, mustn't forget, although pale in comparison with the Saudi figure. Now, even this 3.9 trillion, even if only half of that actually goes ahead and materializes, that's still a very significant amount of work to come. So despite all the problems we've faced in the last couple of years due to COVID and also the decline in project spending over the last 5 years, we still should be fairly optimistic about the projects market, particularly in places like Saudi Arabia and Egypt, which are booming right now, Iraq, which seems to be awarding contracts more regularly and more constantly nowadays as well. So we can be a little bit more, I think, optimistic than we maybe could be a couple of years ago. Same data, let's split it down by sector of this $3.9 trillion pipeline. Just over $2 trillion is in the construction sector. That's about 52% of the total pipeline. It has been a sector that's been in decline, as we saw earlier in the last couple of years, but it's still historically the largest and is likely to be the largest over the long term too. We then see transport projects, roads, ports, airports, and so on, representing 13% of the future pipeline, about $523 billion of known future projects. Then power, $367 billion, about 9%. Oil and gas together, which comprise some 15% of total future spend, more than $540 billion of projects in that segment. Then chemicals, petrochemicals, another $260 billion, $100 billion for water, and $77 billion for industrial projects. I just wanted to end up this presentation by looking at the performance and pipeline for the market using a different metric, rather than using a bottom-down approach from MEED Projects, the database of contracts awarded. I want to look at it from construction output perspective. This is data provided by each government in terms of the value of the construction or the projects market in general, as a percentage of the total GDP or total economy in each market. And we can see here that in each market, the construction output is also estimated to have grown in the last couple of years. In Saudi Arabia, we saw construction output grow from approximately $105 billion in 2020 to what is expected to be about $110 billion this year. Likewise, in the UAE, going from just under $80 billion in terms of construction output to approximately $88 billion over this year, and likewise in other markets as well. So construction output overall is growing. This is a top-down look at the market created from official statistics. It's just another way of looking at overall project spending. And indeed, when we are forecasting for the projects market as a whole up to 2025 in terms of construction output growth, in terms of real change, percentage change in real, taking into account inflation, we can see that very positive return to growth levels for the 6 GCC states. You can see here in Saudi Arabia, expecting to see between 2020 and 2025 about 4% annual growth in construction output, and indeed similar levels in most projects markets in the region. You can see this is after a terrible 2020. As a result of the pandemic, you can see very sharp falls in total construction output, an average 11% decline in 2020, but we've seen a very nice return to growth in 2021, and that's going to continue into 2022 and beyond. And before we go into the question and answers session, just to let you know, for everyone on this presentation webinar today, we do have a special offer on our newly released first half 2020 MEED Projects report, which is a very comprehensive and very large data report on the projects market in the MENA region, going through a lot of the data that you've seen today, but in much more depth, much more detail, much more analysis. And we're offering it in conjunction with the H2 2021 MENA Projects report as a special bundle offer at $4,000. Normally there would be about $3,000 individually each. And so that's quite a considerable saving. So if you're interested, check your inbox, you'll have the offer in there. Right, thank you very much for your attention. Now let's go on to your questions, and I'll see if I can answer most of them, and I might not be able to answer all of them in the time allowed, but if not, please feel free to contact me directly as my email address. You can ask me questions directly if I don't get a chance to answer all of them today. Jafur and Zaloof, first question is, does Jafur and Zaloof, are they petrochemicals projects or water? They are neither, actually. They are oil and gas projects. So Jafur is the unconventional resources program in Saudi Arabia, where it's for the first time exploiting more difficult to extract oil and gas resources, mainly gas, and that's now awarded, underway. Zaloof is an offshore oil field, which also involves a lot of onshore processing facilities as well. The offshore element was awarded late last year, and we expect the onshore element to be awarded very soon. Someone's got a comment, very good comment, to say that much of the recovery last year was actually projects which were delayed from 2020. And that is indeed correct. We did see a bottleneck developing because a lot of projects which were supposed to be awarded in 2020, but due to COVID and the lockdown, instead were moved to 2021. So that did help the market recover. And likewise, we've got a lot of projects in 2022, which have the result of a delay in 2021 and 2020. So although we had a very difficult 2020, we are now seeing a lot of those block projects, those delayed projects coming into the market now. Question is where's the data sourced from? And I should make this maybe a bit clearer. The data on this presentation has been almost entirely sourced from MEED Projects. So you can recreate all the data I have showed today by downloading the data on MEED Projects into an Excel sheet and then pivoting the data, filtering it, and so on, to recreate all this data. So not only is MEED Projects an excellent business development tool, but it's also, as you have seen, a great tool for being able to do analysis for strategic purposes or analysis purposes. So if you do need any help with extracting the data and doing analysis, then please speak with your customer success manager or your account manager, and they'll be more than happy to go through that with you and train you on how to extract the data to Excel and then use that data for analysis purposes. So just reading through the contracts the questions that you've added into the Q&A box. What are some of the big oil and gas projects coming up in Saudi Arabia and the GCC in 2022? Well, as I mentioned, we've got the Zaloof onshore main packages, several $1 billion worth of contracts expected to be awarded very soon, Q1 this year. Obviously, the offshore has been awarded, so now we see the onshore being awarded. I'm expecting to see the first signs of tendering activity on the Ta'aziz petrochemicals complex in Ruwais. That's obviously covering 9 or 10 major complexes. They've already signed a couple of joint venture agreements, investment agreements for that. And I expect to see some of those come to market over the next 12 months or so. We're expecting the Prize petrochemical complex in Kuwait to the 3 or 4 main tenders to come out this year as well. Qualification has been finalized, so expecting that to happen as well. It's very exciting for the Kuwait market. And of course, we've also got a brand new world-scale petrochemical complex coming up in Qatar using some of the excess gas from the North Field expansion program. We also in Abu Dhabi got the delayed Hayat and Gasha enormous sour gas project, which was tendered originally a couple of years ago, but we're now is going through refeed, and I would hope that we might see the first tenders, re-tenders for that come out in the second half of this year if the project goes ahead. Also, we'll hopefully see the shape gas cap project also come to market, also be awarded as well. I've got a question here. Do you have statistics of how many hotels are in the contracts awarded? Well, yes, you can. We obviously have a subsector hotels subsector filter. So if you want to look at hotel contracts specifically, you can select that filter and you can access the hotel construction market on the platform from that. Of course, you can also, if you're subscribed, download that data, and you get the idea for how many the operator, where the contracts are, how many beds in each hospital, the value of work awarded, and so on. A question here about what happened to the Emaar Dubai Creek Harbour Tower project. That was a project launched several years ago now by Emaar that was going to be even taller than Burj Khalifa, probably more than 1 kilometer high. Well, unfortunately, it seems that that project appears to be indefinitely postponed. I'm not sure it makes a huge amount of sense right now for Emaar to go ahead with that project. It's also extremely high cost. It's not clear what the benefit, in my opinion, of that project would be for Emaar in terms of sales. And as a result, I believe it's now on hold. It did receive bids for it, but I think a couple of years ago, but I think they decided to watch and wait on that project and wait and see on it. Question here, what is triggering the construction boost in the region post-pandemic? Well, I think if you're looking at construction sector only, in Saudi Arabia, it's the social housing program, the Sakani program in the kingdom, which is seeing the government join hands with private sector developers to build tens of thousands of villa projects in the kingdom. Millions of units are expected to be or already are under construction, and that's going to be a substantial driver for construction projects activity in the region, in the kingdom in particular. We've also seen a recovery somewhat in the Dubai real estate market. So we've seen a big number of launches recently, like the Al Farjan, Til Al Farjan, Rouge Al Farjan, also Jebel Ali Villas project as well, and some other big projects like Til Al Agaf. And I believe we might well see this year the relaunch of the Jebel Ali Palm project as well. So that's obviously been a long dormant project. It's a palm which is even bigger than Palm Jumeirah, of course. The infrastructure is completed there, but of course there's no construction on the surface. We might well see Nakhil relaunch this project. It will be a very exciting development indeed, and we might well see that relaunch this year. Would the current oil price improve project spend? Well, absolutely, of course. The higher the oil price, the more revenues the governments earn, which means the more money they've got to spend on projects. The oil price currently sitting, what, $70, $80 a barrel, which is probably enough to sustain current spending levels. If it were to go over $100 a barrel, then we would see that step change to returning to the spending levels we saw back in 2014, 2015 of more than $150 billion. That's a big if, because it remains to be seen whether oil can actually go back to those levels. But yes, generally speaking, the higher the oil price, the greater the project spending. And as we saw in the last 5 years, when the oil price drops, then we also see project spending drop as well. Is there a similar presentation for each sector available? I'm interested in seeing the same data and graphs only for water and wastewater sector. You can, as a value added service on MEED Projects, we have a insights menu. In that insights menu, in the briefings section, you can see a large number of complementary value added reports that we have made on each country and sector. And similar report presentations to something like this. And indeed, there is a water and wastewater sector presentation there, which you can look at, and indeed has much of the same data that you are presented today, but on the water market. You can also see one on power, one on industry, one on petrochemicals, one on transport, and so on. So I would really like to encourage subscribers on MEED Projects to go onto the Insights menu and view those reports. Does the data include Project Wave from ADNOC? Yes, it does. Well, the future project data does. Of course, ADNOC has currently in the market 2 major projects, the Merthyr and Al Noof seawater treatment plants, which is very interestingly, for the first time, is going to use the seawater to treat and then inject into its oil and gas fields to maintain reservoir pressure. These are PPP projects, huge projects, and currently in the market, and also projects we would expect to see awarded this year. So that's very exciting as well. What are the major projects in Jordan and Iraq? It's a good question. The big one in Jordan right now is the 4th phase expansion of the Zarqa refinery, as I think we looked at earlier. We are also likely to see the Amman Aqaba water conveyance project, AAWCDP, if I'm not mistaken. That pre-qualification has already taken place on that, and I would expect to see the RFP issued for that over the next month or two. And that is a giant project involving desalination, treatment, and water transmission systems. So that's the major projects in Jordan. And in Iraq, we've already seen a large chunk of projects awarded recently. We've seen the Misan Midland Refinery project awarded to the Chinese recently. We've seen the Ministry of Electricity tender 8 or so simple cycle to combined cycle conversion projects in Iraq to Chinese firms recently as well. We've seen the Al Fal refinery also awarded to Chinese contractor as well. So we are seeing big projects awarded in Iraq finally, again, using a lot of the time using foreign financing. And we're hoping that this year we'll also see an award of the $9 billion Basra to Aqaba oil export pipeline. Finally, we hope to see that be awarded. It's been in the market a long time. Hopefully the two governments can work it out. So here's a question which I get asked a lot, is what are the expectations for Qatar once the World Cup is over? And to that, I can also add, what is the expectation for the UAE or the Dubai market once Expo is over? So I truly believe in both cases that the governments will be looking to maintain momentum once the two big events are over, with a couple of major project announcements, perhaps the Jebel Ali Palm coming back to the market in the UAE, and then maybe in Qatar, the announcement of another couple of events or an announcement of a major spending program, including big infrastructure projects like the Shark Crossing and ongoing expansion of the metro project there. But undoubtedly, the main focus in Qatar over the next 5 years or so is going to be in the gas sector and the expansion of North Field gas and associated projects, much like we saw in the period 2003 to 2008. There is expected to be a mini boom in Qatar as a result of all this money flowing to the market, a huge amount of labor required, companies coming in, and that will itself spur economic development and economic growth, which in turn become a virtual cycle of spending. So I fully expect both Qatar and UAE to announce some major significant new projects and spending initiatives once the Expo and the World Cups are over. Question here, where do I see raw material costs heading in 2022? Well, I think we're obviously going through a period of substantial inflationary pressure. Right now, transportation costs are through the roof as well. And if we look at Saudi Arabia, who I'm talking to there as well, they see real challenges about procuring long lead items and also in maintaining constraining costs as well for key materials. So assuming that the region is improving, and considering as well that the global economy is going to be growing as well, there is going to be a shortage of capacity for key materials, as well as labor, as well as engineering capacity, and that will continue to maintain inflationary pressure. It might also become more expensive to borrow as well. So I don't see a relaxing of these costs in the near term. I think it will take some time, maybe a year or two, before the inflationary pressures to subside. What are the main projects expected in oil and gas for the Kuwait market in 2022? Well, I think we are going to see further investment in the Jurassic projects, the pilot project, the EPFs there, and the Jurassic projects 6 and 7, going to 2022 and 2023. But I think the big project everyone's been waiting for a long time is the Al Zour petrochemical complex, which will be integrated with the Al Zour refinery. It's called the PRIZE project, and it comprises 3 or 4 main packages. Qualification took place a couple of years ago, and I really expect that to be tendered this year. And that's going to be really the one that everyone is going to be focused on in the Kuwait market. What is the situation with the Duqm Oman petrochemical complex? It's a good question. That's also integrated with the Duqm refinery. Well, it's planned to be integrated to Duqm refinery. Will they proceed? Yeah, I think there's a good opportunity for that to succeed, along with other big industrial investments in Duqm. It's well located. It has the support of the Kuwait and the Omani governments. It will be create a lot of jobs, and I think it makes a lot of sense for Oman. So I do think it will go ahead. Maybe not this year, but I do expect it to proceed at some point. Right, here's a question. What's happening in Egypt? Well, Egypt has been a booming market for the last 3 or 4 years. As I mentioned earlier, it has a population growing about 2 million a year. And when the population is growing that fast, then the government has to simply invest, has no choice but to invest for social housing, in power and water facilities, in transport facilities, in schools, in hospitals and other social infrastructure. And that's really what's been happening. It's been a booming market. It wasn't really affected by COVID in terms of contract awards or lack of or slowing momentum in terms of project activity. And it's going to continue booming. And you've seen the government really committed to maintaining project spend. We just saw the second phase of the high-speed railway approved with the German government there. We've got the China state helping to finance and build the administrative capital and new Al Alamein city as well. We've got the monorail and Cairo metro projects underway. We've got huge investment in wastewater treatment and new solar and wind facilities as well. So that's going to continue. It is a difficult market, however, for international companies because Egyptian contractors are extremely competitive, very capable, and for most companies, you have to bring financing with you. If you can bring financing with you, then you have a very good opportunity. But it's very difficult to compete on a like-for-like basis with Egyptian contractors or Egyptian suppliers. But there are still, nonetheless, a lot of opportunities out there. A question here about that $3.9 trillion future pipeline of planned and unawarded projects in the region. So that $3.9 trillion doesn't have a particular end date, but one can normally assume that that will be awarded over the next 10 to 15 years. Of course, it doesn't include projects which are not yet announced or conceptualized or known, which so of course there'll be many more projects added to that pipeline. But likewise, you'll have many projects which will never see the light of day. So that $3 trillion, that is, I would normally say over a 10, 15-year horizon. Question here about data center markets. The data center is a very interesting sector. We've seen a very rapid increase in investment in data centers in the region. It's a very fast-growing sector. The likes of Amazon Web Services, for example, has launched a number of big data center projects. We've seen Khazna as well launch a number of data center projects, and across the region, there's a huge amount of investment in data centers as a whole. So it is a very fast-growing market. It will continue to be a fast-growing market and a growth market. And I would certainly recommend a lot of companies divest or invest in their capabilities in data centers, because it is something that's going to be growing, and the demand for them will, as I mentioned, continue growing, and therefore there's a good opportunity for everyone. The question here about hydrogen and renewable energy on oil and gas projects. Do you think there'll be a significant decrease? Well, I think renewable energy and hydrogen energy are two spectacular growth markets. Renewable energy has become increasingly more cost effective. Solar energy now is on par with gas-fired power projects, and is expected to be the main source of energy going forward, and that's not going to change. So solar energy in particular, but also wind energy, very significant areas of growth. And of course, as is hydrogen, or hydrogen not coming from it, is obviously no significant spending at the moment on hydrogen. But that's going to change in the next 5-10 years as the region uses hydrogen as a means of replacing oil and gas output. It does have significant advantages in cheap renewable energy production, and sees itself as being the main source of hydrogen fuel for the world. And I think that's why we've seen so many announcements in the last 12 months or so for new hydrogen projects. And it's why we've created a new hydrogen tag or filter on the platform to help companies and users find hydrogen projects faster as well. So I think there's very significant growth in both those two markets going forward. So how would you see the implementation of corporate tax in the UAE affecting the market, projects market? Well, of course, the UAE announced last week a 9% tax rate from next year, corporate tax rate for what we call onshore companies outside of the free zones in the UAE. And although it's a positive move in terms of diversifying government income and diversifying the economy, it does, of course, create a headache for companies like contractors, which operate onshore in the Federation. And it remains to be seen how they will deal with the implementation of corporate tax. Of course, there is corporate tax. There's long been a sort of corporate zakat tax as well in Saudi Arabia, withholding tax as well. So it's not like the UAE is operating in a vacuum here with this. I expect it to create some short-term challenges, of course, but in the end, in the long run, I expect companies to just get on with it and be able to adjust, just as they did to the imposition of VAT a couple of years ago. Just reading through some of the questions now. What is going to be the main sector contributing to growth in 2022? Will it be construction or oil and gas? I think last year was very much the story of gas projects, but I think this year, in particular in Saudi Arabia, we will see a return of the construction market. I think when we look at the spending that's coming up in NEOM, in Red Sea, in Amala, in Qiddiya, in Diriyah Gate, Russian, and so on, 7 and so forth. I think in the next couple of years, we really will see Saudi Arabia become the center of the construction market going forward, and I expect it to become once again the largest single sector in the region after a couple of very difficult years. And that's mainly being driven by the Saudi Arabia construction market. Of course, we've seen, for example, the Six Flags project awarded recently for Qiddiya to Bouygues. We've seen Diriyah Gate award more than $1.5 billion of contracts already in the first 6 weeks of 2022. We're expecting NEOM and Red Sea to award more projects as well, Russian too. So I think, I think we'll see a return to construction growth this year. But oil and gas will also still remain significant. We'll see, like I said, Zuluf onshore, Hail and Ghasha, Zuluf onshore, and so on, will still contribute to good, healthy oil and gas spending as well. And to support that, as someone's just mentioned, they said that Saudi Arabia yesterday announced they wanted to expand production capacity to 13.5 million barrels a day, up from 12 million barrels a day. They want to maintain their position as a swing producer, and clearly to do that, they will need to invest in their production in their fields and their production ability to produce. So that will clearly be result in more capex on project spending in general in the kingdom. A lot of that is, of course, already factored into some of the investments that we've seen, like Zaluf, like Marjan a couple of years ago, like Jafurah. But nonetheless, it will also involve a few new projects too. Coming up, I've slightly overrun this presentation, so I'll have to just answer a couple more questions, and then we're going to have to leave it, I'm afraid. If you can, of course, just email me any questions you might have, WhatsApp me, or you can email me here. My details are here. You can, of course, do that if I don't get to answer your question today. Who's financing the mega projects in Egypt? It's interesting to see that their market is in growth there. So the government has employed a number of means to finance its projects through local bond issuances, to project bond issuances to the local population, to bilateral agreements, financing agreements with, for example, Germany to build the high-speed railway network there, with the Japanese to build the Cairo Metro, for example, and with the Chinese to build the New Al Alamein and administrative capital projects. So it's a combination of local financing and also for international financing as well. So it's also a very competitive market. It costs substantially less to build projects in Egypt than it does equivalent project in the GCC, for example. And you've got a government that's really, really committed to pushing projects as fast as possible in Egypt. So it's really very interesting to see that the almost entire government apparatus is focused on projects development, and that's really supported the project's boom there. Question here, what do you think will be the next big project in UAE after Barouj 4? Well, if we're talking about the petrochemical, if we're talking about petrochemical sector, the next big project, as I mentioned earlier, will be the Ta'ziz series of complexes at Abu Rais. Ta'ziz, of course, a joint venture between TAQA, I believe, ADQ and ADNOC, and that's already signed agreements with 30 Globe, I believe, which is, main sponsor is Aruscom of Egypt, and I think it's also signed a deal with Reliance for 2 of the complexes there, and there'll be many more as well as infrastructure works, and that's going to be the petrochemicals, the next big thing in Abu Dhabi. Okay, so I'll just answer one more question, as I've seen a couple of questions about this, which is about EV projects in the MENA region. How can we get information about that sector on the system? Well, to find those projects, I would suggest using keywords. We don't yet have a filter or tag for EV. However, if you were to search for keywords in the search bar, or phrases or words or terms or scope points on MEED projects, you would indeed hopefully find the projects that you're looking for. Bear in mind that we're only covering projects above $10 million on MEED projects. If it involves construction or something above $10 million, then you should be able to find it on the system. And if you don't, and this goes to the same for any project anywhere on the system, if you don't, please fill in the contact researcher box and you'll get the opportunity to ask our queries team a question about a project, and we'll do our best to come back to you within 3 or 4 days with the answer to your question. Okay, I'm afraid there's many more questions, which I'm afraid I don't have time to answer today. Some really good ones there. So I'm afraid, but I have kept a note. We have got a note of them, and we certainly will try and come back to you with the answers to them. If not, please just email me as well if you have any questions, and I'll do my best to answer in due course. As I mentioned, this presentation has been recorded and will be made available on YouTube in the next couple of days. We'll send you the link. You'll also have an opportunity to download the presentation itself right now if you check your inbox, you should see a link there from me, and you'll be able to download it and look at it in your own time and or share it with colleagues. It's been a pleasure having you all on board today. I believe we had a record number of participants, which is great to see. It's great to see that the market recovered in 2021, and I'm really optimistic about 2022, particularly in Saudi Arabia. I think that's where it's all happening right now. And I look forward to speaking to you either in person at our various briefings around the region this year, or again in our next webinar, which we will send you the details of in due course. So thank you very much for your attention. Thank you very much for your questions. And I wish you all a very good day and a very successful year ahead. Thank you.